Welcome to Tip TV Finance. I'm joined today by Francis Hunt, otherwise known as the Market Sniper. Good morning, Francis, and Happy New Year to you.
Same to you. Glad to be back after a long break.
Good. Right, well, yeah, what a day to come back. I think we had the best day for the pound, I think, since 2008. Any views on that? It was certainly...
Yes, it was certainly interesting technically. I believe it's a little rally in a larger move, not to get too excited that we're going to roll later on. We've made a sort of an all-time low, then we'd come around and we'd had a little gap down just prior to the numbers in May talking, and we've kind of closed that fairly impulsively on, as you mentioned just offline, the inflation number, May coming out tough, and a little bit of dollar weakness in there as well. But I fear that's going to, rally's not a long-lasting one, and it's not bottoming this for the pound. I've not been fundamentally able to make sense of this, but the technicals are pointing to lower GBP. So. Yeah. Short higher up would be the trade for me.
I was looking at the economists or currency forecasters consensus for cable, both for this year and next, and for this year, end of this year, it's got 125. Next year, 125. I mean, is that even remotely plausible to you?
I think it's going to be a lot more volatile generally. So
yeah.
I think we've had a bit of a lull in the dollar strength since starting the new year. I do think that's going to reassert again, but we're just not ready to reheat the Euro USD parity stuff. It's all about China, a little bit about Brexit and the pound at the moment. But I think the dollar strength will come back. And I do think as we get into the thick of the Brexit element of things, we're going to make new lows on the pound US dollar.
Okay, so buckle up. Right, I believe you've prepared a few slides for today in and around the yen and precious metals. So
yeah, so well, 2015 November for 16, we said our big macro trade call was buy Russia, sell China. Which worked fairly well. We don't always get them right, but that was a good one because we got both the currency rebound effect on Russia, and we got the oil having a bit of a floor put under it, and even slight rally, not full recovery, but certainly an improvement. So this is where I've sort of thought, well, what's going to be a big time frame thing that people can sort of trouser, and it should work for them on an ongoing basis, and this is what I've come up with. And one of the reasons is also it's a very non-typical pair, and I'll talk to you about how it could be traded later. But I'm looking again at precious metals, and I'm looking at the yen. And normally when there's fear around, I quite like the yen for strength, but this time I'm flipping slightly on the charts. So in terms of what we see here, this is a monthly view since 2006, and you can see the precious metals, this is gold specifically, appreciating with a pullback. Key round numbers have been very significant. You see it at the 75,000 yen, the 100,000 yen, just running, pulling back, just running, and then supporting on top of. And now we're in a zone where we're in between, and I've put those key levels in green and red, a kind of shelf that is 125 to 150,000 yen. And we're pinching within that. Those luminous yellow areas are where we first got on for the first time and then have traded outside, and it's not very much. So since 2011, basically 99% of price action has been in that range.
Right.
And more importantly, it's pinching, which is once again the thing that we always look for, which is a volatility constriction. So if we look at the next chart, you'll see how the most recent price action, still on the monthly time frame, but how's it showing? And I've just put a little green shaded area. You can see those 125,000 yen mark, we keep coming up under it. So those are called hammers, those bottoms, those particular candles that I've identified, and that's particularly bullish. It falls into what a traditional technical analyst would call a symmetrical triangle, and what we call our very specific HVF setup. So there's a squeeze going on there. That means a movement's coming.
Yeah.
So if we drop down to the next chart, we'll get a little look-see on the precious metal. So going with the logic, if yen's going to have a weak year,
yeah,
and that means there's going to be a strong bullion as well, which is going to be the one.
So this is the gold-silver ratio.
This is the gold-silver ratio, quite correct. And we were at all-time extremes, which was very bearish going into 2016, which is why we also said precious metals will have an improved year. Now, many people don't think that, but actually, against the dollar, gold was up 6.5%. Not huge, but significant for last year. Just because the dollar finished strong doesn't change that fact. And that's that big sell-off from that yellow zone, a little bit of a rally, and then a follow-up capitulation. In other words, down with the gold-silver ratio, good for bullion generally because of the higher beta of silver. Now, we've had a little bit of a rally churn during this dollar strength, inverted commas, period, but it's not been significant. Charting-wise, that's very much a rally in a bear trend.
Right.
you can see this doesn't have the impulsiveness of the sell-offs. So I would expect, on balance of probabilities, that ratio to go further down. Remember, the 80s were all-time extreme highs. So we're still quite close to the tops. So what does that mean? Well, in those instances, silver does better than gold if we go full-blown strength on the precious metals.
Right.
And this is where silver versus the yen is. So
together.
bringing it all
Yeah.
together.
Yeah.
And technically, that is a 2011, which was our key year, we mentioned many times, for the commodity top. Since that 2011, we've been in a macro monthly falling wedge.
Right.
And I've numbered each time we've been supported. Key number there, 2,000 yen. So you can see the blue line, both before the melt up and after. Support, just run, support, support. And we're squeezing again there now at the 2,000 mark. So I would see from our pattern a 30% move for gold against the yen. And silver is over 2 plus beta. I would expect the possibility of a 60% plus move against the yen, which could be over the year, over 18 months.
Right.
Very significant potential move. Why is the Japanese yen going to be weaker? Well, we can fascinate on the arguments. China is weakening.
Yes.
So I wonder if the East isn't going to have a tough old time. China is wanting to have, a big car manufacturer, nation,
Yes.
a big phone, Huawei, all of this. So this is very much close to eating Japan's breakfast. They want a Sony, they want a Toyota, they want, and they're not going to settle without having national champions in the same fields as Japan. And they are weakening their currency, and they've got reserve issues, etc. So it's going to get a bit of a crowded space in the East, and I wonder if the yen isn't going to have to suffer with it to keep them in.
So that looks like a good longer-term macro trade. I mean, have you got any sort of thoughts, maybe a trade for the day, something for people who are looking what they're going to do on a Wednesday?
Well, the parallel of the pound weakness that I see is that there's going to be a little bit of a sell-off now on the impulsiveness of the GBP. But we have said we're going to get new highs on the FTSE 100 repeatedly, right. And there's a currency effect behind that. There's also a commodity effect on that, Mike.
Yeah.
And as you're seeing, we're calling for higher commodities, and we know we're quite commodity heavy in the FTSE 100. So we are bullish. We took out the 7,150, which has been a 17-year resistance level, which has been failed in 99. Every major rally has failed there. We have now properly taken out that zone and come back. We'll get strong support where we previously had resistance. So bias long on the FTSE 100. I think it's going to be a good year.
Sounds good. Like good stuff. Francis Hunt, the Market Sniper, thank you very much for your time. And that's us from Tip TV Finance. Visit www.tiptv.co.uk to see further market commentary from our guests, including Mr. Hunt.